Welcome to Buy, Hold, Sell. My name's Matthew Kidman. We're talking 2013 in the outlook. Today I have Credit Suisse strategist Atul Lele with me. And Atul, you're a bear on 2013. You think we're going lower. How do we avoid those bombs that are going to hit us in 2013? What stocks do you like?
Well, we want to be defensively positioned for the domestic economy, but also taking advantage of the relative strength of the global economy. So the first stock to talk about is Telstra. We like Telstra because it offers a fully franked yield of above 6%. Quite a defensive stream of earnings, and more importantly, a defensive stream of cash flows, which they're getting from the government.
The growth is very slow there, though. Not too worried?
Look, the growth is slow on the underlying earnings, but the cash flows aren't. They're growing, courtesy of the government.
Okay, that's one. Two?
Number two is Tabcorp. Tabcorp, again, more of a defensive stream of earnings that you're getting, less cyclically exposed than some of the other domestic stocks, and also they should be a marginal beneficiary of any stimulus we get either on the fiscal level or on the monetary level.
Okay, so you like wagering. Number three?
The third would be GPT, General Property Trust. Really we want to be defensively positioned. As the RBA cuts rates, the long end of the yield curve should fall, which will be supportive of long duration assets, including property.
Property's had a good run in the last 12 months or 2 years.
Property has had a good run. It's going to have a better one in 2013 as well.
Okay.
The reason being that we want to stay defensive, and long duration assets such as property, infrastructure, utilities should do well.
Right. Number four?
Number four is Brambles. Again, we want to take advantage of the relative strength of the global economy versus the domestic economy. We think the back half of 2013 looks more attractive for the US economy. Brambles, whilst not cheap right now, is a good play on that.
So a lot of moving pallets around the world, or increasing number of pallets?
A lot of moving pallets in the US. Also, they're entering into emerging markets. So they're actually getting their growth through entering new markets rather than trying to get market share in existing or overpopulated markets.
Right, let's go to the last one, number five.
WDC, Westfield Group. The reason being we want to take advantage of the fact that the US economy should be recovering in the second half of the year. And we do think that you can have a consumption type recovery when you've got asset prices which are rising, equities in the US are stable, house prices are starting to rise, and incomes which are rising, importantly in real terms because gasoline prices are falling, which helps people consume.
And what about the structural changes in retail with the the internet coming in, changing the way we shop?
Oh, look, the structural change is something which is definitely going to weigh on the sector, but in the US we'd suggest that it is more progressed in terms of that structural transformation than it is in other parts of the world.
So Westfield should be okay?
In relative sense, yes.